What's up, everybody? Welcome aboard to Trading Live with Bubba. And if you were listening to the Market 120 this morning, you would have been prepared for exactly what's happening right now. The markets are getting beat down a little bit, which, again, it's not that the trend has changed. It's not that they're going lower. It's that the well overbought conditions from yesterday are being relieved. ISM number was not very good this morning. You've got jobs tomorrow. So I wouldn't be surprised by the end of the day if we're somewhere near the flat line. But we did expect a little bit of selling now. Unfortunately, although we made money on both of our trades on Tuesday, right now we have nothing to trade. Okay, again, the volume and action is not enough for me to want to get involved. We're steadily going down, and you can see the declining volume across the board. So, we'll sit tight, and we'll watch, and we'll go do what we usually do and take a look at some things. Now, of course, Apple has earnings after the close, and I think just FYI, there's no trade there anyways. Okay. But FYI, I think that Apple and Amazon today after the close will go a long way for determining whether yesterday's rally is going to hold and we're going to turn around and start to head back higher again, or they're going to take these markets apart. Okay. You do have the jobs tomorrow, but at the end of the day, I think today's earnings will be a big step on telling you what the real direction is. And of course, we had the Fed talking about rates yesterday. And of course, they're pricing in 100%, and I'm still have my offer out. I'll take 7-1 from anybody who wants to bet a little cash that they don't cut in September. But in the meantime, so Apple is kind of in the middle of nowhere. And again, there's earnings, so you're not going to get involved in this either way. Amazon, same thing. Now, Amazon's also in the middle of nowhere, and there's earnings tonight. So again, we're not going to intentionally trade something into earnings before it. If we were in a position, I wouldn't change my position because of earnings. I would just let it trade. But of course, coin, which is under a little bit of pressure. Again, remember we talked about this last week. Sell call spreads, and here we are. We're coming down towards the bottom. So now your objective is now they got earnings today too. You're not going to get to oversold today, but they also have earnings after the close today. So again, you typically don't want to start selling premium into earnings because, again, you might be right, you might be wrong, but you don't have the same probability you have because we know that coin's got a projected move of about $25 plus or minus after the close today. So again, remember, you can't trade options after the close. So until you learn how to trade stock against the options, because if you know how to use the stock, you can actually exit some of your options positions after the close. Okay, but we'll get into that some other day. Meantime, crowd continues to get pummeled along with me. I'm still short call spreads here. Excuse me. I'm still short put spreads here, and I'm going to sell some more today. Remember, I told you can enter these type of trades on a scale, knowing that you may have to add more to it. That's one of the big things. There's certain trades you go all in right away, and there's other trades that you want to make sure that you have the ability to add. So you don't want to go with your full arsenal right away. You want to be knowing that there may have to be an addition. Sometimes it'll go right in your favor. Okay, so you won't get as much, but you'll make money. Okay. Meantime, again, this is very oversold. I would look for an opportunity to sell more call spreads. And now, of course, I've got a bunch that are going to expire tomorrow that most likely are going to be losers. Maybe I get saved by the bell, but I don't think Tiffany Amber Thiessen is showing up today. So we'll see. Meta, which had earnings yesterday, to me, as I told you, if this thing moves $50, which it moved just about $50, I'm a seller. And I was a seller of this on the earnings, okay, after they came out. And again, because we've got way overextended and sometimes there's no reason for it. You get these enraged moves, and certainly I'm short a lot of call spreads in here right now. Google, Golf Oscar, Golf Lima. Again, you're really in the middle of nowhere. Okay, they did come, as we talked about on Tuesday. They came from very oversold conditions. It was a great opportunity to sell into this, sell some put spreads. Remember, we're selling put spreads to represent the long side, selling call spreads to represent the short side of the market. Okay, IWM, again, got a little bit overbought again. I'm not going to call this that you should have sold this. It was close. It would have been a little bit of a risk trade. All we are is right back to the mean. So even with the big selling today, down $62 or 625 futures points, it's only all it has done is retrace back to the mean. Remember, when you're looking at the Bollinger Bands, you're looking at 2 standard deviations up and 2 standard deviations down. So we always know that more often than not, markets are going to have some retracement to the mean. Okay. That's just natural. Again, you can't extend. It's like stretching a rubber band. At some point, it's going to snap back. Okay. Moderna, which is getting spanked today. They must have had earnings last night, I guess. Yeah, they must have. They're getting pounded, which is fine. Okay, here's one. This is ideal. I believe the earnings were this morning. Let me just confirm. Hold on before I give you something to do that's incorrect. Yeah, the earnings were this morning. Here's one I would definitely be jumping on. Okay. Now, again, what you really want to do is you want to sit here. We know it's down. We know it's well oversold. We know the earnings are over. So now what I want to do is I just want to look at a shorter time frame, and that time frame is up to you. But let's say you want to use a 15-minute. Okay. So on a 15-minute time frame, you want to wait till you get 1 or 2 bars that start to head higher. Okay. This is like a blowout trade type, but you need to have a reason to go higher. The shorter the time frame you use as your secondary time frame, all that means is the more active you actually want to be. The longer the time frame, the more passive you want to be to enter. Myself personally, I would be using 4 or 5 minutes here. So I would be already in, which I am already in. But again, if you look at this on 4 minutes, you can see that they've confirmed here. So again, it's your choice on how active you want to be. That's what you have to think about when you're doing this. Okay, the shorter the time frame you use for your entry time frame, the more active or passive you're going to be. Okay, but certainly Moderna is one I would definitely look at. Microsoft, very oversold. We said we couldn't do anything Tuesday because of earnings. Well, it's now come off that oversold. I wouldn't be so anxious. Again, I'm not overly anxious to jump into a lot of things now because you still have jobs tomorrow. You still have Apple and Amazon today. But the bigger reason that I'm not so anxious to get really involved is we still have a pretty dramatic lack of volume. Okay. So market participants are not really playing as much as we would like them to do. So to me, that says that the trades I take, I better be pretty certain. Now, I'm never going to be 100%, but I better be 70% certain that that trade is going to be a winning trade. And I can't make that statement in the way this formation is set up with the lack of activity. Okay. NVIDIA, November Victor Delta Alpha. Tuesday we said you could take that trade. Well, look what happened. Rallied $13. Okay. Again, these things should be pretty much automatic when you start to look at them and you start to recognize them, because again, they're not all going to win, but you know the exact risk that you're taking, you know the profit that you can make, and you're taking out the time decay element of any option that you're trading. Okay. So right now we've reached back up. Certainly if I took this trade, which I did, I've already covered the short because there's not much premium to get. So why should I sit and wait when I've made $7? Why should I sit back and try to make the extra $1 to get there? Okay. The Qs, Quebec. They really just came off exactly what we said, off of the oversold conditions. Look what happened. So that rally listen, I can never say that I'm confident that a market's going to rally 600 points or whatever the hell it rallied yesterday. But what I can say is that there's a higher probability of a rally. The size is, it depends on how much panic they create. Okay. Now you're back rotating. So there's really not much to do here. Okay. And of course, certainly you wouldn't want to do the Qs today, knowing that you got Apple and Amazon, 2 very big components of that. Square, Sierra Quebec, again, down on support. We talked about this the other day. We looked for a little bit of bounce, and there it is. Okay. The spiders in the middle of nowhere. They did get oversold like we showed on Tuesday, and certainly enough, you got the bounce. So you can see that we do have a high percentage of winning trades that we look at. Okay. And you're not going to be able to take them all. I mean, you have to judge the size of your account, the amount of money that you're trading with. Okay. I mean, I have trades that I put on with my members every Saturday. Not everybody can take every trade because we put out a lot of premium that takes a lot of capital. But again, you have to judge and put yourself in a position to make the trades that you can make and be able to recognize these when they come, because these are unique and special trades that show up, and they can show up in any market. And you just have to be prepared to make the trade and understand the pattern. Tesla, Tango Sierra Lima Alpha. Again, we got that it oversold, but we said Tuesday it was really kind of in the middle of nowhere, and it's really still kind of in the middle of nowhere. It hasn't quite made it back to the mean, but it's still kind of just sitting there. Okay. So again, I mean, I don't really have an idea of what I'd want to do here. what I see is a stock that probably is getting ready to make another big move as it starts to pin into the nose. So we'll see what happens and let it go from there. Win. We wanted to sell put spreads there, but it did rally ahead, which we'd been selling before. Now you got another chance. Okay. But I think they have earnings tomorrow. Is that right? Oh, they have earnings Monday. Tomorrow is probably a pretty good day to sell some put spreads and win. Okay. I don't think you're going to see it trash out here. I think 80 is a pretty key level, although we're slightly below it. But again, 71 cents is not enough to worry about. Let's just flip back and see what's going on our live board, see if there's any trades to make. And as you can see, not one item has had any reasonable volume that we should be jumping in on and trading. Okay. And that's, again, the not making a trade, the choice not to make a trade is the same as making a trade, right? There's the old saying, it's better to wish you were in a trade than to wish you were not. Okay. And right now, I just see these markets that want to go lower. Okay. There's no panic. This is a very orderly sell-off. So why would I want to try to stop it? You've heard the story of trying to catch the flying knife. Here, you don't want to catch the flying knife because you have no reason to believe yet that there's going to be the reaction and create what we call the V, right? We have no big volume that's going to be able to create that pattern, which is what we're trying to trade, okay? So you have to wait, and we need volume, and I need a serious volume spike here for me to want to get involved, okay? I need a serious volume spike in here to want to get involved, okay? And we're already trading on lighter than normal volume. So when you look at how much we're down right now, okay, the NASDAQ is down 220 points, which was, I think it was up yesterday, 600 and something. So you've only given back a third, okay? But when you normally, on a down day that is this large, okay, this is a little bit over 1%, normally you would see some volume. Well, we're not seeing the volume. So again, why do I want to jump in when there is not enough of a market participation? Okay. Now, this could change. We could see a sudden amount of volume, which would be exactly what we're looking for. If we could get this thing to get us a sudden amount of volume, that would have a great indication that the bottom was in for the day. Okay. And give you a great opportunity to make a trade here. But right now, there really is nothing to trade. You're seeing about every 3 or 4 bars, some buyers come in, but the buyers have not either those buyers that are buying now are covering short positions they had, or they're taking a nibble at the market. These are not buyers that are panicking. They're going to create a short squeeze. And that's what you learn from watching market participation. Okay. You have to be able to recognize that this is a very stable market, and it might be a crappy market. It might be a market that's going a lot lower and might be built on error, okay? Or it might be a house of cards. But at the end of the day, you still have to see a real reason to get involved and to try to fade or go opposite of what the move is showing you right now. And right now, again, wherever we go, this market's showing that it's going down very orderly, okay? So there's no need to try to buy yet because we haven't seen the panic. Now, you might be getting something here in the Russell. Okay, you can see that the volume is picking up a little bit. Still pretty pathetic volume. You could actually be seeing potentially some bottoming action in the S&P. Okay, and the NASDAQ is still just kind of going lower. Okay, so again, there's really not, but we don't have a trade, and we're not making that trade. And it looks like maybe the NASDAQ is trying to create what the S&P is doing. It might be making either a bottom or a temporary bottom. So you can see the difference. The Russell's still going down. The Dow is still going down. But suddenly, the NASDAQ and the S&P have slowed. Okay. You look like you might be potentially finding a bottom for the day in crude oil. Okay. We're consolidating. Now, again, from this pattern, we know one of 3 things is going to happen. It will continue to go sideways. It'll break to the upside, or it'll break to the downside. But in either case, we have no trade until it gives us enough volume and enough market participation for us to want to risk our hard-earned money to get involved. Okay. So the Russell, this is going to be, it's going to be a questionable call. Okay. It's certainly going to make what I'd be looking for. It's going to surpass this volume over the last 10, 12 bars, which is fine. Okay. So let's see how it trades out here for a minute. But I want to see how much. I want to see if there's any late volume coming in, because that would indicate a little bit of panic selling. Okay, now it is still a little bit light. Okay, I don't particularly care to get too involved in these markets because the action is still light. However, because you're here, I will make a trade and put my own money at risk to do so, because it is justifiable. But I like it when it's much busier, when I have 4 or 5 trades like we had the other day. We had 4 or 5 trades all at one time, and I told you to take 2. Okay. But here I've only got 1 potential trade coming up. It's going to qualify. Okay. So now the only question I have left is, will I be willing, will the risk that I'm going to have to take justify it? Okay. Now I've got to wait for 1 more minute. Okay. So my stop in here is going to be off the dead low, so it's going to be 21,938. Okay. 21,938. Okay. So suddenly we're getting a little bit of a spike here, which, again, I don't know if I want to miss this one. Again, I don't know if I want to chase it in, but you could see that I thought that we might be seeing a potential bottom. I mean, I'm not saying these are bottoms, but that was certainly some reaction I would have expected here. So now we have to look and see here. 938, 21,938. So think about this. This trade would have to be 120 ticks worth of risk. Okay, so if you're trading one big contract, that's $600. To me, ain't worth it. I'm not making that trade. Okay, I'm not taking that much risk. Again, this all ties back to the lack of overall market participation. It ties into the lack of volume. It ties into the lack of interest in this market. So although I could have justified the trade, and if I wanted to take that much risk, because I cannot adjust my stop to fit that I want to make the trade. My stops are very mathematically designed based on the current action. So I have to give it enough room to go below the low, in this case, of the action. And I'm not giving up that much risk. It just, to me, it just doesn't make any sense. No matter what happens to the trade, win or lose, to me, it doesn't make any sense to make those kind of trades. And I think that's when you start to learn that, you will find out that you'll find yourself being a more successful, better trader, and your losses will go down and your gains will go up when you stop justifying the opportunity to make a trade and take the trades that you can actually reason that are actual real trades to make, that don't put you in harm's way with a lot of exposure. Again, that's up to you, but that's what I'm telling you, is that what will make you successful is the ability to say no. Okay. And know that the risk that you're taking. Now, again, risk changes based on market action. If we get busy, we're willing to take more risk. But if I only have one trade to make, I'm not willing to take extra risk on one trade, because I'm playing, my trading is all based on the law of large numbers anyways. And I'm basing on being able to make a lot of trades. So when the markets are like they are now, with very little action, to me, it's not worth trying to step in, because again, you have nowhere to go. And how am I going to get my money back if I get stuck on this trade? Okay. So just something to think about. All right. That's always something that we want to keep you aware of, that just because you want to make the trade doesn't mean that you should be, or that it is actually a trade. Okay. So that's something that is important. We should be short the bonds here. That's something in general that you look at, and the discipline that it takes to be a trader. And to all of you, have a great weekend. We'll see you back here on Monday. But remember, I do the Market 120s 5 days a week. So you'll always get an idea what I'm thinking early in the morning. And until Monday or Tuesday, have a great weekend, everybody. We'll see you later.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.